Hi, this is Acme with the Bulletin Board Heroes here at Zach's Traders Cafe, the weekend edition for Sunday, the 8th of September. Starting off with the FTSE 100, which has closed the week below its 50-day moving average 82.30. That means there's the risk of move to the floor of that rising trend channel from this time last year around 80.40, and that also ties in with that May support line projection. RSI back below the neutral 50 level by quite some margin at 41, and that does obviously leave scope for a move down towards the floor of that channel. If we do break down, then what we would like to see is support come in at or above the 200-day line, currently 79.40. On the upside, best case at the moment would be an end-of-day close above the 50-day line, leading to 83.30, 83.40, which was that breakdown line that we had at the beginning of the week. Moving on to the DAX, and here back below the 50-day line as well, so similar to the FTSE, we've got the chance of a move down to that support line projection, the floor of that April falling trend channel rather at 17,800, and also the 200-day moving average, the RSI there at 45. Best case at the moment is that we can head back to 18,600 and the top of that falling trend channel, but disappointing to say the least with the bull trap double top with the May resistance there just under 18,900. The gap down as well, unfilled gap down to the downside, also not helping the situation. Moving along to the Dow, and here the position not too different from the FTSE and the DAX in the sense that we've gone back below the top of that gap, the August gap there at 40,300, very close to the 50-day line, 40,200, and the risk now is a move down to the floor of that rising trend channel from last September around 39,300. The only thing which would get this market out of jail now is break back above the mid-August support there, 40,500, but looking rather weak, especially given the way that the RSI is now back below the neutral 50 level at 46. Moving on to Bitcoin, where one would guess that this would not be any better than the other markets we looked at, and indeed the threat of a move down to the floor of that falling February trend channel, 51,300, still very much a reality. Recent resistance has become basically measured against that old support that we had there from the middle of last month, so 56,000 and below 56,000, looking towards 51,000 on Bitcoin. On to gold, and here the picture, at least we're sort of consolidating at the higher levels. The old initial August resistance around 25.20 becoming the support area, and the area just below it towards 2,500. RSI still above neutral 50 at 53, so that means that we're still hoping that we'll stay above 2,500 and then head back to the highs and perhaps up to the top of that channel there from back in December as high as 26.50 by the end of this month, but looking a little bit ambitious now, given that we are ticking along into September. Moving on to the stocks, and a reminder with many of the stocks that we're looking at today that actually all the promotion in terms of interviews and articles and everything else can play second fiddle to the technical setup and just the way that people buy shares on a charting basis or a technical basis or just a numbers basis. In the case of Amigo, we were looking for a turnaround after the break of that 0.27 peak of the middle of August, and obviously the shares doubled and tripled after that. The initial target there was 0.53. Above that we were looking for penny, and obviously we're on the wrong side of 0.53 at the moment, although we did have a nice bit of price action for Friday, so looking for that 0.53 to be broken and another retest of the early September highs there, 0.8 plus, with 1 pence being the best. Obviously don't really want to see an end of day close back below the Friday support there, 0.35. Moving on to Arcontech, and here the chart somewhat strange perhaps, but very good strange in the sense that we had a bear trap gap reversal to start the rally back in August, July, and then another gap higher at the beginning of this month. We've hit our initial target there at £1.21, and above that on an end of day close basis, looking at the upper parallel of that rising trend channel from the summer of 2022, heading as high as £1.53. Perhaps we'll get that by the end of next month, or hopefully a bit sooner than that. Also in the mix is the imminent golden cross that we'll get hopefully later this week, with the 50 and 200 day lines both rising, and this looks like a mid-move consolidation bull flag, V-shaped bull flag. So everything looking very positive there at the moment. Only back below the £1.15 level, well below the floor of the flag, really delaying the upside scenario. Also looking positive at the moment is Beowulf Mining, and here with a broadening triangle base, we managed to gap up at the end of last month after gapping down twice, well basically in July and in August. So that's a bear trap island reversal, one of the best setups there is, and looking for 36 pence, especially after that weekly close above the 50-day line at 27 pence. Ideally, we stay above the initial September resistance there at 24. On to one of the stars of the show, which underlines the way that very often RNSs and news flow plays second fiddle to the charting setup. Here we had the V-shaped bull flag breakout through 37 pence, which was identified on the 2nd of September. We're looking for the shares to fill the gap up to 52 pence, which they did exactly on Friday. End of day close above the 50-day line at 52 pence, and we're looking for a fresh leg to the upside, maybe as high as 88 pence by the end of next month, although obviously at the moment it's difficult to think of what would do that apart from lots of cash coming back to the company. Ideally, we stay above the initial September resistance there at 42 pence and head higher, although obviously there's a risk that we just fail at the 50-day line, as we've done many times since the autumn of last year. On to Carclo, which has also been championed here, and you can see why. Unfilled gaps to the upside all the way since the spring. Top of the channel there, heading for as high as 48 pence. Looking for that by the end of this month, while we remain on the right side of a recent 35 pence resistance. The gap higher of late, just at the end of the week, making us feel quite chipper, as are the bounces off the neutral 50 level that we've had since the beginning of last month. Onto a stock that I don't think I've ever covered before and probably nobody's heard of, which is CEPS, but here we've had unfilled gap to the upside through the 50 and 200-day moving averages. Initial target there at 30 pence, which we'll hope for over the next week or two. Above that, looking for a fresh leg to the upside, which is the upper parallel of that rising trend channel base from the autumn, heading to 45 pence, which I suppose would be the best case scenario target for the end of next month. All the while, we don't want to see any price action back below 22 pence and recent broken neckline resistance. Moving along to First Class, which seems to have rehabilitated itself in the recent past. Here you can see that we're hanging around just above the rising 50-day line, so sort of sideways shuffle as I call it. We have filled the gap and then fallen back after that, the initial August gap, so we want to see sustained price action back above 3.15 pence to give us an initial target here up to 3 3/4 by the end of this month, which is the 200-day moving average level. Obviously you can see that in the recent past we failed after pushing through that 200-day line, but it still makes for a decent target. Ideally, the shares keep on giving us end of day closes above 3 pence. Moving on to Graft Polymer, where we already noted on Friday a very strong candle, and the week finished with a very, very strong candle. Temporary dip to new lows there below 0.11, and so that's a bear trap and a very, very strong candle, one of the strongest one I've ever seen actually. But initial target there, obviously the 50-day line there at 0.21, but looking for 0.35 as soon as the end of this month, if that candle is actually potentially director buying or significant buying by others. Obviously, we don't want to see any end-of-day close back below 0.11. Global Petroleum is next. Too difficult to resist with a bounce off the 200-day line and bounce above the 50-day moving average at 0.07. At least while we're above that 50-day line, which we've done for the best part of a month, looking for the shares to at least head back to 0.11, best case up to 0.14, and the top of that triangle there from back in February. Next on the list is Helix Exploration, which has bounced back very well after that rug pull announcement with the slight delay during the week. The shares are looking to close that gap there at 20.3 pence, which hopefully they'll do on Monday. We've had a couple of nice looking hammer candles there off the floor of that rising trend channel from back in April, and that suggests that an end of day close back above 20.3 in that gap should give us at least 27 pence, maybe as soon as the end of this month. Ideally, we stay above recent resistance there at 17.8 pence ahead of that move to 27 pence. Moving along to Hummingbird, which seems to have sorted itself out with the bear trap Highland reversal there, bouncing up a red support line projection from last autumn as well. The key here is that we stay above the 50-day line there at 8.3 pence, and then not only get us a 9.6 pence target at the 2023 resistance line, but head up to as high as 12.4 pence by the end of this month. That could be on the cards as long as we stay above that 50-day line. Bounce above RSI 50 as well, giving the shares a good look over and above the unfilled gap to the upside through the 200-day moving average. Next up is Mobile Streams, which was also called here. And here you can see that we've managed to push through all the recent near-term targets. First target there, 0.06. Second one, 0.08. And the third one, which just missed at 0.11. And looking for that, or 0.12, hopefully early this week. Next up in terms of targets would be the line I'm just about to draw at the moment, which is heading towards the 0.2 pence area, although obviously with the history of the company, one's aware that it may take the opportunity to raise some money and dampen the bulls over the near term, but at least 0.2 on the horizon, especially while we're above the second target there at 0.09. Moving along to a stock which is still a relative market newcomer, Rome Resources, and here a nice bounce there off the lows. We've basically tested the 0.26 area 3 times, so it looks like a triple bottom there. There's also in the mix a trend line that has been broken, which I will attempt to draw in a second, and if we can break that trend line there, we're looking for the 0.4 pence plus area, so basically proper price action above that trend line at 0.29, and looking for obviously 0.34 initially, up to 0.46 by the end of next month, if this is indeed the low for the shares. Moving along to a stock which I haven't covered for a bit, Symphony Environmental. Here it looks like we've got a rising trend channel base. We've spent 2 days above the 200-day line at 3.1 pence, and above that, looking for the top of that rising trend channel from back in November at 6.7 pence, as soon as the end of next month. But the key here, certainly staying above the 200-day line, and ideally the worst case would be we stay above 2.5 pence and the floor of that channel. Sealand is next, and one of the best calls here of late, which obviously you can see overshot the runway by quite some margin, 0.16, the level that we were looking for, and obviously we went up to 0.38 on Friday. Obviously a bit of dust needs to settle there, but at least while we're above the initial target there at 0.16, looking for a partial or even full retest of that spike through 0.3 pence. Finishing off with Safestay, and here unfilled gaps to the upside. We've had 2 of them in the recent past, one for the start of August, one for the start of September. We've already got the 50 and 200 day lines rising, so it suggests there'll be a golden cross later this month, and looking for a minimum at 32 pence over the next week or two, especially after that break of recent resistance at 24 pence, which is now, I suppose, the stop loss on the shares. That's it for me today. More updates during the week.